The reason that you're not having consistent results is because you're not consistent with your actions. Check this out. I'm going to break down my journal from today, my trade session, how I did for the New York Open. Hop into my journal, very simple stuff. 3 trades. What was my goal today? I had one goal. That was basically to trade one idea. The third trade almost didn't happen. I'll show you why. But first, let's get into the structure. I had a bearish bias given the fact that we were essentially just trading higher overnight, and the fact that we had traded higher for the handful of sessions prior. We had the opportunity to reject a level of interest that I was looking at, and I was just willing to give it a little bit more room. I felt like this was a pretty high probability trade given the circumstances, the fact that we were opening and the movement into the open. So all of those things. What really made this easy, though, is the fact that I gave it more room to work, and that I was really not interested in trading or trying if it wasn't going to work as I imagined, as it worked in my head. If it was not acting the same way, I would have just bounced. So this is my journal. Very simple chart. I'm going to show you this. It's got, let's see, a 1 minute chart right here. We got NQ on the 30 as well. So it's very, very straightforward stuff. I have a couple indicators. The main thing you want to be looking at is the fact that I have a couple resistance levels marked out based on daily candle levels. There's a million different reasons why I might have a level of support or resistance. It's not because of a previous high always. It could be a million different things. It could be volume based. It could be based on some sort of ICT concept. I'm going to simplify it and write it how I want to write it. But with that being said, that resistance level R1 was what I was looking at. So I had a short ahead of the open. As you can see, this little magnifying glass, I was short like right here. I'll show you the executions. I was short right here, and basically VWAP got bounced. They bid it there, and I got stop break even, which is unfortunate. I probably should have taken it off. I was up about $1,000 on that. But after that, I realized that we were pushing really aggressively above these previous pre-market highs, essentially right here, into this upper standard deviation band for VWAP. So what I've been noticing a lot lately with these sideways markets is we are going to tend to reference these as well alongside VWAP. It's not my normal go-to, but I'm going to be willing to look at things that I see are working. This is something I've seen work, I don't know, 20 times in the last like 50 sessions. So, when VWAP's relevant, of course, there are days where it doesn't get tested at all. But with that being said, I shorted basically above the previous high. The pre-market high, I'm short above it. I'm short above it, and I have my stop nearly at like, not 60s, but like 70, right? Like it's like right up there. It's not too far away because that's a lot of risk in general. So my max risk was about $700-800, something like that. I think that sounds a little, and actually it wasn't. It was probably about $650 to $700 at the peak, my peak stop. It almost got ran, almost, but we were good. So my goal is just to enter as aggressively, as close to this standard deviation band as I could. Just try to get in up high so I could put my risk a little bit further. That was my premise. That was my approach. The resistance, the R2, I mean, we could have tested it. We could have, absolutely could have, but then that would have been my luck for the day. However, I was just looking to get positioned in this wick. I gave it room. I did not really trail it until it started failing. So the reason that I liked this setup as a fade instead of just buying the fair value gap right here is pretty simple. I mean, when I see these gaps off the open, number one, and running above a pre-market high or a previous high to the left, or vice versa for a short, they don't normally work for me. So what I've done over the years is start to realize a setup works both ways. If a setup is high probability in good conditions, don't fade it. But if it's going counter to your bias, if you think that price is willing to head lower, given the fact that we had the structure that was getting sweeped, and also the fact that, we have the VWAP band right here, there was reason for me to think it was going to essentially trade lower. So I'm not going to ignore that. Even though it looks bullish, that's great. I've had enough experience losing on these trades going long that I'm willing to short it. So I shorted above the fair value gap, anticipating it to invert. Simple as that. VWAP gets kind of, dances around there, the opening price. I'm willing to hold through it. My stops, is still kind of in the same area. I removed a couple bucks of risk, but I was just trading one mini today, so I wasn't really trying to get in and out. I really wanted to be done in like one execution, but today ended up being 3. So one mistake was essentially, again, VWAP bounce. Probably should have taken some. I should probably taken it off there. I'm gonna be honest with you. I probably should have trailed it there, but I wasn't thinking. So then we get into here. You see, it's a nice trend. Like I think I could zoom in here. Yeah, zoom in a little bit. You see, you have this 9 EMA, right? I know you guys hate this stuff, but guess what? There's a reason why it fucking works. There's a reason why people look at this stuff. What it's telling you, and the reason that I have it on this chart specifically, is just a reminder to be like, maybe I should kind of trail my stop a little bit instead of letting everything go to break even. That's like my reasoning for that. So, we have a little bit of a wick above, and I literally got trailed out there. So I made $1,000. I was looking at the lower standard deviation band, thought it was going to bounce potentially, right? Because, well, we had the example to the upside, example to the downside. Why would I be like, there's no reason for it to bounce? I just got in on a trade for the same logic. So with that being said, I kind of held it. I was trailing right here. I got trailed basically on this green candle. I said, I'm probably done for the day. But then I saw this candle start to like roll over, and I got short again, 3 minutes later. Put my stop up here. Did not put it directly above the high. I wanted to give it a little more room just because I know how NQ can be sometimes. So caught that short as well. Rode it down into these lows right here, and I held it through the pullback. I was able to basically just skirt out of that stop. It barely missed me on the trail. I was trailed probably like right here. So I was trying to give it room to work, but also not give back too much. So there's that balance where you need to trail it when structure is confirming that it's working in your favor, but sometimes it takes a minute to actually materialize. So on all these setups, and that's info I had from the morning. I knew that this market is kind of slow to roll over. It took, 20 candles for my entry to make new low a day. So I was not in the mindset that it needed to happen quickly. I was willing to kind of just let it meander around and kind of roll over. So we get short there and again, it's also the opening range low break. That first 30 minutes for me is going to be the opening range. So reasoning simple, using previous daily candles, just to kind of give you an insight. I was looking at the wick of the prior day's candle, the upper wick, and I basically looked at the midpoint of that. I noticed there's a measurable amount of reactions that will happen at these wicks. I don't know why, but you can see more often than not, if you measure out a wick, any sort of substantial wick, if you look at the half or the quarters, you can see at least some sort of discernible reaction in a lot of cases, right? You don't want to do this in isolation by itself. That's not a trade, but this is just one of the pieces of information I was using. So was also looking at yesterday's volume profile, the fact that our point of control was lower. I was looking to see if we get dragged back into that, and we pretty much did. We can look at some charts at the end as well, kind of talk about what I think is coming up next. But the setup, I look at this as an open rejection. We opened and pretty much just rejected right off the open. Sure, yeah, there's like 5 minutes of going up higher, but it really just trades lower. Like it tests a level kind of. It doesn't make any sort of substantial rally like we've been seeing sometime last week where it pushed higher then sell. It kind of just sold off the open. So took that down from VWAP band to VWAP band, pretty easy. And then with that, I was also looking at, again, the retest of the opening range low. So those are my trades. These are my executions. Long story short, these are my executions. You got pre-market short right here. Boom. Stop, break even, boom. You see the prices. I circled them, but I drew the arrows to where the exits were. You see my next entry was 827, sold 773. So, you're talking 50 points there, give or take. And then you have basically 100 points on that last short. At the very end right here, sure, I could have held it longer, but I realized that if I put my exit like right there, essentially once it started to kind of roll over on the structure, I would be able to secure just a $3,000 day, just to make the math easy. I like having, if I can, right? Like if it's right there, I'll just do that instead of it being like a $2,900 day, just because I know that's going to annoy me, right? So it's all about doing stuff that's frictionless. These are some of the additional charts that I put in my journal here. It's pretty simple stuff, but we have, let's see. Yeah, the VWAP bands again. You have the midnight open. We were above midnight open. That's another piece of info. I oftentimes I look at a lot of things, so I don't exactly remember to say every single thing I look at. These charts that I have, I'll show you in a second, but I have like 20 different indicators on them that I can pull up if I want to look at something. I just don't keep them on, obviously. So the rejection, the main thing really was just this. It was, yeah, you have the open, right? It pushes higher, it wicks above, and then it just trades lower. So once you get below this opening range, or I'm sorry, even just these overnight lows right here, the structure right here, this is really where you want to be considering shorts. If you're struggling to find good setups, wait until you break the structure. Shorting high a day is not it's not for the faint of heart. It's not always the most fun. Like I told you a second ago, I almost got stopped out. This would have been a different story. I would have been telling you, yeah, I lost $1,000 today. Instead, we made 3. So it doesn't always just work super easily, but I was willing to, based on how I've seen price trade in the last, I don't know, 2-3 weeks, I've noticed there's just this tendency for the only shorts to really kind of materialize from this early indication of weakness. The slowing of momentum essentially is what I'm talking about. So I also note here, just in this little write-up, look at the lows to your left. That's where it's probably going to bounce. You see a giant wick right here, right? It's going to take some time to digest, to cut through the price, to get through those levels. So there's a bunch of orders sitting there. There's people trying to buy it, save the day. But my job was just to take it and see how long I can hold it. So that was a trade. We'll actually go ahead and look at one more chart here. Then we'll get into the actual trading view charts. So early rejection got stopped. It's a pretty simple setup. You can see volume kind of corresponding with some of those like wick sell-offs intraday. But I mean, trading really isn't, it's not a hard thing to do when you have criteria to enter. The only problem is half the time we are taking trades that don't even align with our criteria, you know? So that's what I would implore you to kind of consider, is the fact that the trades that we want to be taking should really, really, really be looking at just a multitude of things. You don't want to just be trading on one specific, criteria or setup. But here, let's get into trading view. Here we are. So I have my trading view open. ES, again, it's pretty much been hugging this lower standard deviation band all day, which is going to tell me that it's predominantly weak. So with that, I'm not necessarily looking to fade that, right? It's not really a high probability trade for me to go against something that is telling me it's extremely weak for a persistent amount of time. It's not just one test. It's not an overextension, mean reversion type trade. It's just continuously weak. So my final EXO is about 670 area. I could still be in the trade. I could have just had my stop a little more conservative. I'd have still been in this. S1 is going to be your prior day low. Make this real simple for us. Prior day low. Then you just look left. You have additional lows. Volume is all right, I think. Volume looks all right. Yeah, could be better. But it's Monday also. You got to remember that's Monday. So we have some news coming up later this week that we want to be considering. With anything, you got holidays approaching as well. You really want to kind of just play it right. So this is pretty much confirming exactly what I thought it would. You could be looking at these previous lows right here. You can also be looking at stuff like these fair value gaps, these inverse fair value gaps. Say what you want. You can use volume profile. You can use fair value gaps. I can read a chart using a handful of different tools. All they are is methods for looking at things. You don't want to be too caught up with, oh, it only works if you do one system. I've spent many years learning a bunch of different things about markets, and all of them have some sort of measurable edge. I mean, it depends whose hands you put them in, but yeah, there's a measurable edge to pretty much anything you're looking at. So let's see what we got here. Yeah, I mean, this is pretty much, you say this is like the overnight one. So yeah, this is pretty much from today. See how we're trading down lower, we're dragging volume. The prior day you had the point of control here, that 721. This is pretty much what I was targeting, like this area, This is kind of what I had as a good rule of thumb, kind of rough estimate where we would trade to. And then obviously you look lower, you could see the previous point of control for 2 days ago, 3 days ago. So really what's happened is, we had this little bit of a breakout structure and it's just failed the breakout. So now it's pretty safe to say that we are probably going to trade. I mean, I would say to the bottom of the range, probably not today. I don't think we're going to trade to the bottom of this range, down to 4.4s. Yeah, 414. I don't think we're going to trade down there today. However, I would be willing to try the next couple. I think this is a pretty good high a week, at least for now. We obviously can have some big news that'll change it, but here's your ES. ES had relative weakness. This is kind of what I was talking about in the Discord and also in my own journal. With ES, it would have just been a better trade. ES actually responded just pretty clearly to the fair value gap right here. You could just straight up short based on this. Boom. You got your inverse. But, I really did like, and yeah, we also have SMT right here. So that's really what helped ES is just it showed early signs of weakness, early signs of relative weakness. NQ was a little more resistant to going lower. So I should have been more aware of that, but you make do with what you got. So going back to NQ one last time. Yeah, see, here's your manipulation. It's very common for a market like NQ to just give you a little bit of that flavor, just, go fuck yourself type action. But, you do what you can. Price will manipulate out of the way. But if you understand that there's a function for it, it's a thin market. So this kind of movement really doesn't mean anything. 70 points, you can make a good amount of money off this 100 points right here. But it doesn't necessarily mean much in the grand scheme of what price can do. We've traded now almost 300 points lower. I think we will test prior day low pretty soon, but yeah, that's it for me. I'm done. That's the beauty of trading. You do what you can real quick, get your setups in. You don't overcomplicate it. You don't overdo it. And you can just pretty much go enjoy your day. I recommend if you guys are struggling, the best thing you can do right now, simplify the amount of trades you take, do fucking less, and also choose where you're taking these trades. Location matters way more than anything else I can tell you. If there is one piece of information to help you trade better, pick good areas. That's it. I don't care what you could have the best entry pattern, signal, setup in the worst condition or the worst location, and it doesn't mean shit. Where if you have a good location, it doesn't matter how you enter the trade. Just give it enough room so it doesn't stop you out. Don't get confused. Candlesticks are quite literally just a clue. Location and structure and areas of interest, that's where people are defending either positions or hedging. There's different levels of gamma. You have options, expirations, you have dealers, you have institutions. You have all these fucking different interests that are looking at levels, prices, price pays. Patterns are they just make you feel good. So until next time, as always, decipher the algo.